Welcome traders. Let's review 36 Renko bar which we left a few months back with our targets. So last time we made the video, we were at this point where we said market has these targets. We are reaching somewhere here, and then it did reach to the tick at the projected level 41.25. And it reversed from there very aggressively. A massive movement have taken place, and here what we have is a VWAP which has been modified for multi-day, and we have been using this for a trend, downtrend. You can see these two lines, white line and the red line, and you can see that the yellow line is much faster, much more reactive and responsive compared to these two lines. And these are very long moving averages of the VWAP. And also, just as a reminder, we also have these stair step blue lines, which is representing the previous day's VWAP. This is more for people who want to do some aggressive swing trading and hold the options. Why not? So what this is representing as a reminder is where the drift of the trend is going on and where it is shifting. Even though we predicted that it's going to go either to this point or this point, and we had these lines drawn based on our analysis that market is trying to go somewhere here, and we predicted this level close to our suggested market moves, and we took off from there. So at this moment, what we have to do is go back to the measured move. We are tracking this system of indicators as measured move. And what does that mean is they are going to be reactions of these white and red lines, which are longer period moving averages of VWAP. And how far have you stretched away is what we are interested in tracking. It's a simple tracker. We look at the biggest height, as we have discussed earlier as well, right here, of this mean. And let me change this color to probably solid. And then what we do is when we find initially the trend has changed, we call it a reset. At reset, we find the biggest distance offset from these red and white lines. And once we get a snap back, what we're going to do is we're going to just track it unless we find a new distance, and we are going to keep it offsetting from those moving averages. And when they merge, you will see some reaction. There's one reaction, right? And these are not small reactions. These are 100-point reactions. We're not looking at intraday 3-point strategy here. We're looking at a big moves. And there's another reaction. Okay. All right, there we go. So we had these reaction points already established, and we know that way in advance. So let's mark these areas. All right, so here we are. We got some 3 perfect reactions. Now, why did we get this? If we go back in time, there will be reactions coming from the top, which you can just see it right here as well. Now, if this height has not been broken, we're gonna keep tracking this, okay? And we will start seeing some reactions unless we find a new structure. You can see it's reacted from here, reacted from here. It is reacting from these levels, offset from the bottom. I'm just rotating the bottom at this level. Let's keep doing it. So this from the red line, now you can see. So what is happening is every time based on this reaction, this structure we found here, it has reacted. Let's do it properly. It is proper. Now this is again a Ranko chart, right? So it may be offset by some points on each side, which is okay. This is not designed for that. This is designed to see how far is my, if trend is moving up, first of all, how far it is going. It is saying that if you have entered the trend, stay in the trend until this height has been reached right here. And it does. And then it says now the trend has really shifted from this point onwards in a very strong up move. How do I keep in the trend? Where am I expecting to take some profits, and what can I do at what point when I'm expecting a little bit of pullbacks? Okay, these are 50-point pullbacks. Great for option tradings as well, or hedging your locations. But I'm still going to stay long. So this is my expectation where the market is going to be hitting. I'm long here. I took my initial risk and I'm long from here. I'm gonna not get out. I'll have to find a reason to get out. I'm not getting out. Some reactions here, some reactions here, some reactions there, and some reactions there. Now, what do I do to get into the trade? Let it come back to it, right? That's what we need. So I'm looking for these endpoints as pullbacks for my targets, some reaction points, and when the height is not meeting, and then obviously we need to know where the endpoints are. We can use C54, which is reflection points of market makers where they show up. Until that happens, I'm going to keep going long only. Right now, there's nothing telling me to go short. Got it. So, but this is what happens. We are tracking this. Some reaction might happen here, some might happen here. It is reaching these endpoints and turning back a little bit. It is just coming back to the yellow line, fueling up, fueling up, fueling up, boosting up. And what now, based on your strategy, you have to figure out what is a good entry to enter the market. I'm going to hold it for a day or two for 30-40 points. You can do that. We're going to get some reactions of 20, 30, 40 points. You can do that at the edges. Now this has gone a little bit higher, but it's okay. The best thing is to let it come back to these lines, and it does. This is a good, beautiful pullback. And there it is. And we have another pullback. So this market measured move is active still. I haven't found any new height. Maybe this is a little bit of new height. I'll just keep it same way because this reaction has happened on the other side 3 times, and it has reacted here at every spot to certain, if you see the points here, 40, 50 points, 30, 40, 50 points, 30, 40, 50 points. So this algo is reacting to this. But if you want to really pile up a little bit heavy duty, we have to wait for it to do a serious pullback into these lines. And it does here 1 time, 2 times. And today, so unless it breaks down and tips over, it is still bullish. And we have already explained where we are expecting the trend to falter, and we have those dates. So you would see when this energy show up. Now, as you can see, market is reaching these heights before it gets the reactions, right? Getting these heights before getting the reactions. Now it got a very strong reaction at halfway point. This is the 50% reaction point, which is telling us that, and I don't know that either, which one is going to pull all the way here, but I just have to wait. I have to wait. And when I wait, the distance I'm looking for it to come pull back down from the height, which is also at the same time in the line, this is where I am at a better position to put on my trades. And there it is, there it is, and there it is. You'll also notice that when you see this strong pullback, you can even see this is not going to even go to the height, right? This is not reaching the height anymore. This is now, you can see here, same thing. They are not able to reach that height, loss of momentum. Same thing, right? It is having trouble reaching to the top side. It came pretty close, but here it did not. It went to 75%. It went 50%. So it went 50% here. Here it went all the way, but got a stronger reaction. I hope you can see this. Let me put a container box here so you can see what I'm saying. So we got some good reaction. 75 points. Here also good reaction. So we were expecting this reaction, but trend was too strong. We're getting small reactions, but we are still getting them. And then if you look at this, putting it from the line, we are saying how far have you gone away from the mean. Each of them gave us a good reaction when the height was reached. And there we got some reaction here. Let me just mark those levels. So this is what is a measured move is all about, and it is also giving us the information about the quality of the strength of the market. Here the strength was pretty strong because you can see what we should be expecting by laws of nature, that it is coming at least at 50%. It's not. So trend is very strong. So it comes back to this line. If we are expecting to be here, if we are still long, we no need to add anything until it gets to 50 or to this all the way back to the line. So no need to add anything. If you are here, keep on staying. That's what we are doing. We are not touching anything. Ride the trend. Ride the trend. Keep on riding. Right? Ride the trend. So now here, at this point, we got some reaction. We are looking for a 50% pullback where we can enter again. Let's keep on moving, and there it is. Now you see this market drifted in a curve, in an ellipsoid fashion. Market moves in ellipsoid fashion. 7 touches, it curves. That's a different subject to talk about, but it came down to 50% right there. This is a good ad. Okay, this is a good ad. Let's try again. I'm looking at 50% or at the coming back to the mean. No 50%. No, right here. Keep on tracking, and there we go. It came down to 50% on the line. Perfect entry happened right there. Add more. Remember, trend is up. This is what you need to add. This is a strong pullback. Add. Next. Keep on going. Now we just left this train station. We just got it. Let's see how far it goes. It is turning back on 50. What does that mean? Think logically. We are expecting this measured move to continue. It has been for months. It is not reaching that state, and we got a strong pullback. What are we expecting? We're expecting not to do any add on 50 right now because it just went all the way 100% retracement of this measured move. What we do next? If it is turning not from the top, if it is going to the top and coming back at 50, add. But it went to 50, it is coming down. So 50 of this 100 is the 50 on the bottom. So 50 becomes the 100 and 0 becomes the 50. I hope you understand what I'm trying to say. So it returned from 50. So 50, I want to buy this on the pullback, which was supposed to be coming from, let me just draw this. If market went like this and it pulled back at 50, then I will buy there. But it turned from 50 itself. So I'm waiting for this guy to be coming down here, which is bringing me back to the line, which it comes down here. You got it, is buy again. If you missed this one, buy it again. I'm not talking about any oscillators on the bottom at this point. They're also telling us the position is long, go long, go long. Right, we will talk about it later, but you got the point. This is a very strong pullback, and here we're going to keep tracking it unless we find a new height. This is our height. It's going on for months. It will shift. The frequency and height will shift as the volatility comes into picture. So this is what I was talking about, right? If it reaches the height, and comes to 50, which happened somewhere here, right? It reached the height, now it came to 75, and now this is good one. Why? And look at this one. It should have gone here and come to 50, but it went to 50, came down to the line, right? So this is, again, it is, look at the oscillator now. This is good, again, a good buy location. Now this is very hard for people to buy when the market is making all-time new highs. This is how you do it. This is how we have to do it, right? That's it. Now this is a great pullback right here, buy again. You have to be proven wrong to stop and change the position. A lot of great hedge fund masters are shorting the market for the last 2 months. And look what's going on. And they've been doing this for the last 1 year. They keep shorting, and this is a problem because we know there's no shorting context at this point. When it crashes this and everything tips over, and then what is going to happen? If this goes like this, then this is going to be hitting downwards, and then we do the pullbacks on the other side. And we'll short the market. So let it prove itself right now. It's not there yet, right? Like this. So right now, we're just going to keep buying until it stops us out. And this is where we had discussed in the previous video how we can stay offset from certain spots, how we want to stay offset and keep staying in the trend. And this is easier approach to doing this by what we talked about. And we have shared multiple videos on this last year. Check it out on the blog. But this is where we are at using the 36 pullback reflective wave. And you can also, if you have some oscillator you like, there's nothing wrong using those things, but in the right location. Now this is right location. Now this oversold makes sense only at this location, as you can see, right? This adds an extra layer of confidence for you, right? How do you trade? We can trade using hedged phenomena. We can bias the hedges, which we should be because we are still bullish. So what we do a ratio trades, which we are biasing a certain scenarios. Now this is where people got in panic and say we are getting out. And I bought some, they're doing the wrong things because the market does something which puts them in panic state and their logic goes off the window. But this one, if you track it for years and years and years, you can start building a portfolio in the right direction. So there has to be reason to say the trend up is over. And I showed you the pattern. It has to do that first. But based on this structure, which we are following for a long time, this structure, this is being used to depict the market bias, direction, and the trend. This is where the current state of things are. All right. So I think that is all I wanted to synthesize with our friends here on this subject. And this is a chart of ES. And anything can happen. You have a panic here, you can come, panic can come, right? CPI goes bad, even worse, panic can come, but we have to trade our structures. Because market already has everything it needs to consume displayed here. Now if you want to do some typical Fibonacci assessments, which is okay, Lucas investment, Fibonacci investigations, as we say, use all the tools all the time. But there has to be context. We can also use modified shift pitchfork. We have 3-hour videos on this, how to use it, how to use that for timing the market, how to do this for trend change, pullbacks, everything. So let's put that on. Every software has that. So what is happening is, if you look at it closely, what is going on here? It is just, see, this moving average is one way to describe. There's a mean and mode and medium. Simple 6th grade mathematics. So market is rotating. When you're doing profiling of the market, the profiler structures are typically displayed in the bell curve left to right. In the video series for 3 hours, we talk about it, what is stopping us to describe the structures going sideways. So let me draw this so it makes sense. So if I tell you to draw day by day or week by week or month by month profiles, what will you see? Something like this, right? And something like this. Something like this. And this is where your values are shifting up. Where is shifting up, right? The trend is up. Now, the idea of 6th grade mathematics, what we are talking about is, how about other way around? What is stopping us to describe that the structures can be tilted? If I tilt my bell curve, my profiles, and I can find a way to find the edges. So let's draw that just to make some sense out of it, what I'm saying. So what about profiles going sideways, like D going sideways, right? D going sideways. So same thing, this is still showing value, but it is twisted and tilted. But it is showing the value, and the top of that and bottom of that, we can use that extensions also of the top and the bottom, and then we can track how the market is moving. It is just doing the same thing, but we are deciphering the value rotation in a sideways market by a different tool. And that's what the pitchfork, Andrews pitchfork, modified shift pitchfork, and shift pitchfork are all about. Okay, and what do we talk about while doing that? Well, we need 3 points, and we can offset it. We can watch those videos where I describe so many conditions, and you can pinpoint amazing things and also time the market if you know how to use it properly. So we're not going to go in too much detail. So let's try putting a normal Andrews pitchfork. It needs what? A, B, and C. So I need 3 anchor points. So if I do this A and I do B, where's my C? So what do? So I have to do something about it, right? And then the market is going upwards. So I need to have is pointing upwards. This is where the modified shift pitchfork come into picture. So if you, this was Andrews, let's put the shift. The shift is going to go like this, right? So this is showing the shape. Now if I do the modified shift, now see it looks a little bit different. So this is the reason why all these things came to life. Okay, because they wanted to adjust how it is working. All right, so how do we place it? We need to, if market is going upwards, we need to have a upward rotation D's I drew. So let me draw a pitchfork which is pointing upwards. So let's use let's use modified shift pitchfork, and needs A, B, and C. If I use this A, use this B and C, and see what happens. And now remember, market is moving differently. So this is the shape it puts by default. Now in the videos we discussed very in depth for 3 hours the structures it reveals and how do we adjust this. We're going to anchor B and C. We are going to shift the A and we're going to use it as a floater. And what we are going to do is we're just going to vertically squeeze the A point, keeping B and C the way it is. And I'm going to squeeze it, shift it, lift it until I find some curve fit for my first pivot. And let me explain that. Let me get rid of the other lines which I think have consumed it. We'll just keep that bottom. So we are allowed to, first of all we are allowed to rotate the A anchor. B and C we have to freeze. So A, B and C has been chosen. A, B and C. All right, A has to be in the middle of B and C because B, C is here. A has to be in the middle. Now A can, on this vertical axis, let me draw a vertical line where the pivot is, A pivot is. On this line only I can rotate the A. And what I want to do is keep in mind that I'm curve fitting the data. Okay, which means I have to see some pivots show up. So how do I know some pivot showed up? Market went up. This is a mean. This white line is the mean. On the top and the bottom are the extensions. Okay, and you can choose your extension. Let's see what we have. We have these extensions. Typical. Okay, 6.5, 1.6 Fibonacci numbers. You can come with your extensions for the given market, but it has to be located the way I showed you. Now what has to happen next? We got to see some, is this placement correct? We have to see some pivots. Now if I look at this market, it is holding, it is respecting, and then it goes to the next one. So this one, by virtue of it going from the mean, holding on the mean to the next one and holding reaction, now you can't see this is 30-40 point reactions. We already know that. So we know that, hey, this is tracking this direction and this value correctly. Okay, and we can shift it when time comes. So this is where we are, and what is happening here? Getting reactions, getting reactions, getting reactions, getting reaction. You can see the whole structure unfolding if you do it correctly. I like shift pitchfork the best personally. And there's no good and wrong answer, but this is looking at a multi-month huge trends. So this is the mean. So it is possible that what can happen when the panic sets in. See, remember, it is reacting from those highs to these levels now. See that? Now I can be smart enough to say, hey, this is my height from the pivot. From the top also I can see where the reactions are going to come down. These are my measure moves. Measure moves, measure move, measure move. So it could come down here as well. So let's see what happens, right? But the trend is up. Now, if the trend is just coming down, this is the mean, and it's not even pulling back to the mean. It is staying on the top channel right here. This is the top channel. If it is staying in this top channel only, you can see. Let me move it. Oops. It is rotating in the top channel. See this? It is the green and this channel. You have to observe all this. With practice, you will know. It is not. The trend is pretty strong. Trend is pretty strong. It can channel like this, drift for weeks and months as it is. So do not get too excited about shorting the market unless this two lines we talked about coming off VWAP multi-day is twisted on the other side, but we're getting reactions. So worst case scenario, it can double, and it will come. If it doubles, this reaction is going to go to the mean. If you see this from the top, oopsie daisy, If you look at from the top, I think I re-look at it. It is fine. I think I misplaced it somehow. So the point I was trying to make was, if it doubles this reaction from the top, it is going to come down to the mean. It has not touched the mean since November, and it is rotating on the spiraling on the top side. There's nobody stopping us to have a lot more channels inside channels inside channels. It'll be a little bit of challenging to manage all that, but you got the idea what's going on. So I'm going to keep this, and I know if they really pull back hard and if it twists, I know that they might be coming to this mean channel. So we'll save this and track it as well. And this is going to be at this point. I keep moving. I keep moving this. I apologize again. I am not trying to move this, but this is what I'm. So this one is gonna keep day by day. I'll keep track of this, right? Bottom. It's gonna keep rising, keep rising, keep rising. One day, it will get in a panic move, and what we should see that it comes back to the mean. Think about your point of control in your market profile. It has not touched the mean yet on this channel. So this is how we can detect the trend biases. Trend is at this moment. If I ask you what is a trend, I got out of my trade. I did this. Now this is for S&P. Remember, this is ES market I'm tracking. So at this point, there's no reason to panic because nothing has turned on the south side. In fact, this is a buy signal. Now anything can happen in the market. This is a game of probabilities. You're playing the probability and the structures. Now what we should do is make this line is already fat, keep this line. If it comes back here, it will be much better buy. So for it to come down here very fast, great buy. If it comes rolling down, this average lines on the VWAP, the red and the white, is also going to tip over. It's not there yet. It may take, they stay there for months. They stay there for months. And this is how we trade long term. Unless this is broken, you create a rule, I'm going to stay long only. And this is my offset from the mean. I'm going to stay long only. So this is, for me to get into something to worry about, it has to break this and see what the market conditions are fundamentally. And right now, there's nothing is telling me I'm going to just keep operating as a pullback. And I think that should cover this, what we wanted to on review of this 36 Renko. 3 plus 6 is 9, and this is how we are tracking this for last year and then also for this year. Now the second part of the equation is, where are we going? Where are we going from here? If I track it, what are the possibilities on this chart, on this system? So I put the mandala range on our reflection boxes. You can see here, this is my mandala range on these boxes. And what is going on here? From this structure, the minimum target is this 49, 40, like almost 5,000, and it reached that already very fast. Last year we said it's going to reach 4,700 when it was 4,150, and it took, we said 4,650 area, and it did. It took a couple of tries, but in November it did, right? It reached it. So from this structure, break of this structure, it is saying it is going to 5,000, and it did. So it's be already there at this point, right? We have to do some more technical analysis, but here we are at this structure, we are at the right spot. That's the reason we got some reactions here as well. Now we can do, this is again, don't want to get in too much in detail, but this is what it was showing. If you took this long, hold it to this point, and we are there. The target has been met. So now you can exercise caution. You can exercise, let it come decent pullbacks, but the trend is still up. I think we got enough of the trend direction and structure at this point, and we shall connect again once we see a change in sentiment. All right, so from here, if this is a pullback, where is it going next? What is the anticipation? Well, keep the bar, keep looking at the bar, 51.32. Right, we just keep tracking on this. It's gonna keep drifting, keep tracking reactions. Thank you so much.